G'day mate, it's me, Willie, the Tapwise Owl. Down under, we've got a cheeky little game called Two Facts and a Fib. Reckon you can spot the porky? Number 1. Before hitting record, Andrew swore blind that this was a ripper idea and that my true blue Aussie accent would be a smash hit with all you crafty beer professionals on the YouTubes. Number 2. Tapwise makes it dead easy to run your beer club and bring your mates back to the bar with your very own branded brewery app. Monthly subs are a breeze, perks and rewards tick along on autopilot, and the cash lands in your bank account every night, you business legend. Number 3. In the past year, breweries have pulled in nearly 100,000 extra chatroom visits and raked in over $1 million in recurring revenue with apps of their own. Got the fib? Right, mate. Andrew reckoned this was a bugger idea, but joke's on him. I went and did it anyway. So book a demo today and let's show Andrew you're keen on packed tap rooms, steady revenue, and of course me, Willie, the Tapwise Owl. Cheers, Cobber. Now enough chin wag. Let's get on to the learny bit.
Hi, everyone. Thank you. Welcome to this webinar. Thank you also to craft beer professionals and Andrew and everybody there who invited me to join you and talk to you today about something really exciting. I'm sure that everybody is very interested in excise tax and how that applies across the country, what you need to know as a brewer or craft brewer excelling in this industry. I speak a little fallaciously about how exciting this is, because I think that whenever we mention tax, kind of people tend to drop off. But this really is a important and interesting topic that is very key to what we are as a beer industry, as the alcohol industry in general. And so there's kind of a lot to know about it and a lot of small details that I'm hoping to be able to explain to you today. Speaking of which, who am I and why am I talking to you? My name is Alex Koral. I am Regulatory General Counsel with Sovos ShipCompliant. Sovos ShipCompliant is a software company. We provide business to government compliance support, including for the beverage alcohol industry. We manage all sorts of interstate shipping and distribution rules, so all sorts of license tracking, order tracking, brand registrations, including with the TTB and individual states. And we also have a large service within the direct-to-consumer shipping market, which I have talked previously about at this conference. So just glad to be back, glad to be here talking to you all. And, shifting gears to something, again, that we said can get a little bit dry, but is super important and something that we all need to know about and make sure that we are all tracking. I think that there's a procedure for these with questions. So if you do have questions along the way, feel free to chime them in. I will probably try and save most of them for the end of the conference, the end of the session, just to keep things moving. But if you have a clarification question, what was that? Can you go over that again? Let me know. I'll be happy to stop and make sure we are all on the same page. Because again, this is something that can get a little bit dry, but we need to know about excise tax, what it is, and how you can fulfill your obligations when you are selling both in your tasting room, within your state, and especially when you're selling across the country and really expanding your business. So let's get into things. My track today is going to start out talking just a little bit about the basics of excise tax. What is it? What are we talking about? Why is this an important thing? I'll talk then more about how you do report your excise tax. What are some of the compliance obligations that go into that at both the federal and state levels. And then some, tips and tricks, things to keep in mind when you are selling across state borders, because that's when things do get complicated. Again, I think excise tax is such a fundamental thing that I really hope that all of you who are out there and producing and selling are aware of this and are meeting your obligations. But again, as you get bigger, as you do more things, this just gets more complicated and more things to be aware of. And hoping to just prepare you for that and get you ready on your journey as you expand your brewery and grow. So let's dig into things. What do we talk about when we mean excise tax? Well, excise tax is just another type of tax. It's just one of the many, many ways out there that governments and regulatory bodies have determined how to generate revenue, how to levy money for whatever reasons that governments do that for. All the obvious ones like roads and safety and business support. Lots of good reasons why there is tax. Lots of good reasons why we should be paying that. And enabling our governments to be the best they can. But excise taxes are a specific form of government revenue that are different from other types of taxes. So these are different from, say, income taxes. These are different from sales taxes, different from tariffs or other sorts of import levies like that. Excise taxes are a product-specific or industry-specific types of tax that really focuses in on a specific part of the economy, a specific industry. And alcohol is hardly alone in having excise taxes imposed on them. At the federal level, there are excise taxes levied on a number of different products and industries, such as fuel taxes, air travel taxes, tobacco taxes, pharmaceutical taxes. And because these are product specific, a lot of these taxes are then designed to sort of deal with some of the exigencies that exist within these industries. So the fuel tax is often then directed to pay for road generation and road maintenance. Telecoms is again used to regulate the telecoms industries. And the alcohol tax is one of those as well. Currently, the alcohol tax generates about 10% of total federal excise tax revenues. In comparison, gas taxes, fuel taxes are about 50% of excise tax revenue. And then excise tax revenue itself is a pretty small or a much smaller part of overall federal revenue, which gets a lot from income taxes and that sort of thing. The other key thing around excise tax is that this is an indirect tax. That means that it is not paid directly by the people who are most affected or are doing the operations in the end. That is to say, it's unlike a sales tax where, you go into a store, buy something for $9.50 and end up paying $10.25 because sales tax was assessed on you as a consumer. That means it's a direct tax. Since this is an indirect tax, again, this is not going to appear on invoices or receipts that consumers will see. But consumers are, in the end, always going to be paying these taxes because these taxes should be built into your listed price. So if you are paying a, say, 10% per gallon tax on beer sold in a state, you want to make sure that for every gallon of beer you sell in that state, you have included a 10% charge in your the pricing that you're selling it at. Otherwise, that money is going to be coming out of your pocket, and that just means less profit. And so we'll be talking a little bit about these variations later. But again, this is why you want to know what these different taxes are so that you can prepare for them and adjust them into your prices so you have the money to actually pay them to the government. Excise taxes come in varieties. There are volume-based or value-based taxes. So again, if you're doing something more like telecoms, it would be a charge on the total amount you are of wireless services you're necessarily buying. Things like alcohol, that is very much a volume based, and so this is the total amount of alcohol that is being moved through a jurisdiction. That's what excise tax is going to be assessed on. And as we're talking about the beer alcohol tax, this is something that is very fundamental and goes back a very long way. So indulge me just a little bit. There is a really long history and pretty interesting if you want to get into it. This is certainly a little bit of a nerdier topic, so I'm not going to stress it, but some interesting stuff around the history of the excise tax in America. Alcohol was actually the first product that had a domestic tax charge on it. The very first taxes in the United States after the Continental or the Constitutional Convention were on tariffs. Right after that was the whiskey tax. This is a tax imposed right around 1789, and it immediately led to a rebellion. The whiskey farmers, corn farmers in Pennsylvania rebelled against this. Led to the notorious Whiskey Rebellion of the 1790s. When the last acts of a president, this was the last case when a president led led the army into battle. Of course, nobody was actually killed or harmed in the rebellion. Thankfully, this was all very peaceful. A lot of just kind of marching around and demonstrating. But it led to these Pennsylvania farmers leaving the country, moving down to the wilds of Kentucky and starting the Bourbon Trail, or at least so the legend goes. The whiskey tax was still maintained and was a big leading revenue generator for the early 1800s. We're here, however, to talk about beer taxes. The history of the beer tax goes back to 1862, which when it was first imposed, and it was imposed as a revenue generator for the North, for the Union during the Civil War, and was one of the key ways that the Union was able to pay its Civil War debts. Following the Civil War, the beer tax was kept on, and it was actually a leading revenue source for the federal government into the late 1800s, at times providing up to a third of federal revenue was coming from taxes on beer. So really pretty impressive when you think about it. This all, of course, changed in the early 1900s, first with the passage of the 16th Amendment, which enabled the collection of income tax, meaning the federal government was less reliant on alcohol taxes, and thus the 18th Amendment, the Prohibition Amendment, which we all know how that went. And then thankfully that was repealed with the 21st Amendment in 1933, leading to the modern age of alcohol sales within the United States. Of course, one of the key things as the government or governments were moving out of prohibition, one of the key concerns was what sort of regulatory environment are we going to create following prohibition? And of course, how are taxes going to apply for that? Because taxes were going to be part of it, one of these key provisions within a regulated environment. And if you ever look back again to the post-prohibition era, one of the key texts that you want to review is toward liquor control. If you ever talk to a regulatory agent, they're going to talk about how important toward liquor control is, how this was the document that designated and designed the modern alcohol market. A lot of the statements are a little bit overblown, and you wonder how many of them have actually read this book because it talks more about the control market than what we have with the three-tier market. Nevertheless, taxes were a key part of toward liquor control as well, one of these key institutional tools that it recommended governments apply and adopt. There were three main reasons why excise tax was seen as a necessary part of a healthy, regulated alcohol market. One is simply just as another revenue source. Largely not necessarily to fund the federal government broadly, but more as a revenue source to fund regulation and enforcement of alcohol rules. So alcohol taxes are then used to just go pump back into the system and fund the enforcement agents, fund the investigatory agents that are going around and enforcing these rules, and also to help fund systems to help combat some of the problems that alcoholism can bring up. So there are plenty of states where alcohol taxes are specifically designated for alcoholism treatment, which is a good thing. And again, goes back to that sort of excise taxes being used to treat some of the harms that these industries can generate. Similarly, alcohol taxes are seen as one of the ways to discourage problematic drinking. Governments can raise and lower taxes depending on their principles as a way to artificially raise prices and thereby attempt to combat problematic drinking. Of course, there have been some studies recently that shows that that's not really effective as a ways to combat alcoholism. When you raise taxes, really you're just kind of pushing out the occasional drinker as opposed to the problematic drinker who is just going to continue to pay taxes and maybe purchase something that's less expensive. So again, there are common sense reasons around this. Evidence maybe doesn't point to it, but nevertheless, we still have taxes as one of these artificial price raisers to discourage problematic drinking. Taxes are also a way of creating control within the legal market. So if you have even a token tax payment as a requirement to be a legal producer, somebody's not paying your taxes, that becomes a de facto reason they are problematic and doing illegal sales and could be issued enforcement action against them. And so this kind of becomes a way to have a little bit of buy-in for the industry when it comes to general regulations and general enforcement. The key thing there, however, is that taxes can't be too high. Otherwise, then you might encourage a black market because people are trying to avoid those costs. Again, a lot of the principles and background ideas behind taxes, good to keep in mind, good to be aware of as what's out there, especially if you ever do get into policy discussions. But more of background. So let's get into some of the more actual day-to-day what's going on with excise taxes. And as we get into it, we can see how at the federal level, alcohol taxes are still a pretty good revenue generator. These are data from 2023, but you can see how the annually excise taxes brought in over $11 billion of revenue for the federal government. certainly not a major revenue generator for the federal government. It brings in $1 trillion in annual taxes, but still not nothing. And again, a lot of these revenue are then going to fund the TTB and other agencies that are then enabling our industry. You can see the breakdown between different products: beer, wine, distilled spirits. Notably, even though beer is the largest in volume still of products sold in the United States, distilled spirits makes up the bulk of, or the majority of excise tax revenue. That's largely because, as you might be aware, there is a real difference between the tax rates for wine, beer, and spirits, with beer being very low generally, and distilled spirits being very high generally. Sometimes 10, 20% of what beer taxes are, distilled spirits is charged at that rate. So even though there may be less volume spirits sold, their rates are so much higher that they do have this higher share of the total product. When we're looking at federal excise taxes, what are your obligations? What do you need to know? These are kind of the broad basics of federal excise tax. And again, there are a lot of details and nuances that go into this, but this is kind of the overall view of what you need to know when you are looking at your federal excise tax obligation. The key thing is to be aware that all these rules are coming from the Internal Revenue Code. That is a specific statute, a chapter in the federal code that does a lot more, but it certainly talks all about alcohol production, licensing, labeling, and of course taxes. And it's key to point out that these rules are coming from the Internal Revenue Code because you may be aware that there is another chapter of the federal statutory that deals with alcohol, the Federal Alcohol Administration Act. And so you have these two parallel federal rule sets that you need to deal with. However, when we're talking about excise taxes, we really are focusing only on the Internal Revenue Code. And key there for beer is that the Federal Alcohol Administration Act, the FAAA, and the IRC have two different definitions of beer. And so you want to make sure you are applying the right one. It's fairly simple, actually, though, because the IRC is the one with the broadest definition. It is the one that incorporates the most products. Under the IRC, beer is defined as all malt or malt substitute products with an ABV over 0.5%. So basically, if it has an alcohol content greater than mouthwash, and it is made from a malt product or a malt substitute product, which includes rice and other cereals, other neutral sugars and other grain sugars like that, then it is going to be a beer product, and all the beer-related rules are going to apply to it. And again, the key consideration there is that if you're aware of the Federal Alcohol Administration's hop requirement, the FAAA says that beer products need to have hops to be considered a beer. That hop requirement is not a part of the IRC, and so therefore, this is why it incorporates a lot of all the products basically out there, and you don't have weird considerations about, well, my seltzer doesn't have hops, therefore I don't have these rules. When it comes to IRC and excise taxes, those are off the table. Your product will be included in these taxes and will be subject to taxes. At the federal level, taxes are generally paid by generally with alcohol taxes, excuse me, they are owed in the jurisdiction where the alcohol will be consumed. And so products that are being produced and consumed within the United States owe United States federal alcohol taxes. And they are generally paid by the first party to own the product. The first party to own it really, once it is removed from bond, is the key word. And so that means generally it is the producer or the importer. That means you are a craft beer professional. You are making beer to be sold within the United States. That means that the tax obligation is imposed on you. and because you have a brewer's notice, you should be aware of this and should be paying those taxes. And be aware of that. But again, if you are importing beer, you'd be owing that as well. The key thing is recognizing when this excise tax becomes due. Federal excise tax is due at the moment that beer is removed from bond. So you will be aware you have a storage facilities where you're keeping beer. Once it is produced, you're not ready to sell it. You're bottling it. You're doing all the preparatory things. It is still, quote unquote, in bond. Excise tax is not due. Once you are now ready to sell it, you're selling it to distributors, you're bringing it to the tasting room. However, you are taking it out of your bonded facilities. That is when then excise tax becomes due. And at the next filing period, you need to report that change in disposition and pay your taxes to the TTB. The TTB will determine your regular schedule depending on the volume of beer you produce or sell, distribute to distributors. These can be monthly, they can be semi-monthly, quarterly, semi-annual. There are a lot of different varieties, again, depending on how much taxes you owe. The general rule is the more taxes you owe, the more often they require you to file them. Whereas if you don't owe very much taxes, it lets you kind of build it up before cutting a check. Excuse me. And be aware that there are different rules and different, of course, rates depending on the volume you are producing and the different products you are making. So if you are making a malt or malt-based product, you have the beer taxes. If you are then getting into other types of alcohol, that will be different rates and different procedures, perhaps. And the key thing there is that there's a whole different licensing scheme is there as well. So you should be very considerate if you're going to be making non-beer alcoholic products, because there's a lot more to it than just paying different taxes. Do know that the taxes are going to be different as well. When you are reporting to TTB, it is not just about the number of total volume, and here's a check. There is a lot of reporting that goes into this. You need to be reporting what you have produced, what is still in bond, what has been taken out of bond, where stuff that has been taken out of bond is gone, if you have any spoilage, if you have anything that has been reclaimed. All sorts of stuff needs to be reported to the TTB. And so if there is really one key thing to learn and take away, I think from this is, well, one, make sure you're paying your taxes, but two, get ahead of these reports by using services to maintain your data and keep it in a clean and accessible manner so that when you are filling out your reports, you can do them quickly and effectively and not have to be scrounging around, finding receipts, tracking all those different slips of paper you wrote stuff down on. You really want to keep things clear and in a state of readiness so you can do this right away and make sure that this really kind of boring, annoying part of the business you can get done quickly and get back to the fun stuff of actually making beer. Because again, if you're delaying all this stuff, you're spending a lot of time building these reports out, that is time you're having to spend on this and not doing the fun stuff. And again, then if you are delayed on it, if you're doing a slate, then you get into the whole problem of fees and fines and other penalties. And if the TTB does not think you're a capable, effective, compliant part of this industry, that's when they look into even should they renew your license. And nobody wants to get in that situation. So again, get ahead of this, recognize what your obligations are, make sure you have your data in order so you can file these things on time and clearly and really get ahead of it. So we're talking about the different rates for the federal level. Here is the schedule produced by the TTB. These are the rates for domestic beer taxes from 2018 on. You can see there is a breakdown, again, based on the total amount of beer you are producing and then the total amount of beer you are taking out of bond and having to pay taxes on. You'll notice that there has been a lot of, in the last 20, 30 years, this is one of the things that organizations have been, that beer guilds, beer groups have been working on, is been creating a lot of clarity and support for especially craft brewers to reduce the tax obligations on you, so that if you're not one of these major sellers out there, you have a lot less burden when it comes to taxes, and sort of hoping to enable you to grow and to be more successful and able to compete with those big brewers. So you can see that there is a really big discount for your first 60,000 barrels of production. Note that these rates are all in barrels. Those are 31-gallon barrels. So again, if you are a craft brewer, and I assume you are if you are listening to this presentation, your first 60,000 barrels, which is probably going to be most of what you produce for most of you, your federal tax is only $3.50 per barrel, which is very low, very good rate. And it's very, very enabling to succeed. And then even once you go up to above 60,000, up to your first really even 2 million, and honestly, if you go to it, even the first 6 million barrels is a rate of only 16 per barrel. A lot more than 350, but still not as bad as it could be. And believe you me when I say there's a lot less than it is for distilled spirits, even wine. Note that the first 60,000 barrels does apply to everybody. So even if you are making 5.5 million barrels of beer per year, your first 60,000 barrels will only be charged at a rate of $3.50. And then everything above that will be charged at $16. If you are a really major domestic producer, importer, going over that 6 million barrel rate, again, congratulations, you're doing very good business. That's when you're going to get into this really high, or the highest rate, I should say, of $18 per barrel. Again, there's a lot of nuances and considerations, especially if you are an importer. Maybe you're dealing with a lot of different breweries. How this can work out can be kind of complicated. So, again, this is maybe the second thing to take away is if you are dealing with this, especially getting to the more complex ends, it's always a good idea to consult with counsel, talk to an attorney, talk to somebody who is really an expert in this, can look at your books and can tell you specifically how this applies to you. But just being aware of this and tracking your beer, because again, this is one of those areas where data management can really be your friend, so you know how many barrels you have produced and which tax bracket you are falling into and what you need to manage there. But again, good to know. And so we're talking about some of the ways that I mentioned some of the ways that there have been easing on, especially the craft market. One of the great things that happened in the last few years was this passage of the Craft Beverage Modernization and Tax Reform Act, or the CBMTRA. This was passed in 2020, and it was really the product of years and years. This was something that came up repeatedly in the 2010s of, it has support from 80 senators and 400 representatives, but unfortunately did not pass committee. So delayed. Finally, this passed in 2020 through, again, one of these reasons that we really should support the guilds and the industry organizations that are out there advocating on behalf of especially the craft beer market. They put in a lot of effort to lobby the government, lobby Congress to finally pass this. And the CBMTRA provided a lot of great relief for especially the craft beverage, but really the industry as a whole, of creating a lot of clarity and reduced rates for everybody. So, a lot of these, the beer rates were kind of set in ahead of time. But what the CBMTRA did for our industry really was, one, it clarified a lot of the single payer tax rules. So this is, again, if you're maybe an importer dealing with a lot of different brands, it clarified how you could manage that and how you could get the lower rates on those beer you are managing. One of the other things that the CBMTRA did was it allowed transfers of beer within bond, which really has enabled a lot of great collaborations in the last so many years. So previously, if you were a brewer, you wanted to collaborate with another brewery, really gen up interest among your different audiences. One of the brewers would have to take it out of bond, or would have to be the entire party owning it and doing everything to control the tax preferences. This was amended within the CBMTRA, and so it now allows transfers of beer, between different breweries while it's still in bond. So it can move out of your facilities, go to somewhere else. Somebody else can then bottle it, can flavor it, can do what they need to, and it is still technically in bond. The taxes are not owed. And then it simplifies how you determine who's actually owing that. So again, can get a little bit nuanced, can get a little complicated. So if you're in a position doing collaborations, check with somebody, know how you're doing that, know how you're doing it right, so you can take advantage of these offerings and get your reduced tax rates when you're doing that. One of the other things that is going on with the TTB just this year, the TTB published an Industry Circular 2025-1. So the first industry circular of this year. This established a pilot program for different alcohol tax filers to improve their to test improvements in the tax filing system. Currently, this pilot program is only available to breweries, and it is also only available to breweries that are not on a prepayment schedule. So if you are on I think it is a monthly, quarterly, or semi-annual tax filing with the TTB, which again should include most craft breweries, you should look up this Industry Circular 2025-1, very easy to find on the TTB's website, and you could apply to be part of this pilot program, which is intended to really simplify how you are doing reporting, how you're paying taxes, to make it a lot easier, and potentially will be spread to the rest of industry if it succeeds for you. So if this is something you're interested in, something you want to take advantage of, again, feel free to look it up and see whether you qualify and whether you can send in your application to see whether the TTB will take you up on that. And again, it can maybe help improve things for everybody out there. One of the big things that has also come up in recent years, has had some clarification from the TTB, is around the question of alternating proprietorships. Alternating proprietorships are situations where breweries essentially share a facility. There will be one brewery who kind of probably owns the location, owns the property, has all the facilities and the manufacturing equipment in place, but maybe they don't have the capacity to use it all the time, or maybe they're just trying to help out their other breweries in the region, and will rent out their space and offer it so that multiple breweries can share the facilities and all be beneficial from there, all benefit from the use of those locations. Again, this has been something that's been very beneficial, I think, for a lot of breweries. The key thing there is that you need to have this approved and set up with the TTB. So if you're going to get into an alternating proprietorship situation, again, you just want to make sure that the TTB is aware of this and they have a record of this associated with your license, so that if they're looking at, say, the different license addresses, they're not going to be questioning why are two people set up in the same location. They already have record of this. Part of the approval process is designating who is the host and who is the tenant brewery. You also need to then indicate what the diagram of the facility is, so you know whose bonded location is where and how you are separating the two different beers produced at a facility, or even more types of beers that are produced at a facility, so there's no cross contamination, as it were, between the different products. When you set up an alternating proprietorship, the key thing is there that the tenant brewery is effectively their own brewery. Even if they are not in their own location, they are fully responsible for their own activity, which means, of course, they have their own license, they need to get their own colas, and critically for this presentation, they owe their own excise taxes. And again, that gets back to the whole key thing of needing to understand what the different bonded locations are within the facilities, what beer is stored where, so that when it is taken out of that location, the responsible brewery, whether it is the host or the tenant, knows what is theirs and what is their responsibility to then report to the TTB, and again, of course, pay taxes on. So, again, something to maybe check out and have counsel look at if you're getting into this. Going to be a repeating refrain from me, but fairly straightforward. And again, the TTB has done a lot to make this a much more straightforward and accessible program if you are looking to take advantage of the opportunities around alternating proprietorships. The last area I'm going to be talking around within the federal area are beer adjacent products. This is, again, something that has become very popular, very interesting for the beer industry in the last so many years, trying to expand and look at all the different product types that are out there. And this is something we get definitely questions about is, I'm making a seltzer, I'm making a margarita in a can, one of these RTDs. What is different? What do I need to know that is different from beer? And the key thing here, again, is going back to the Internal Revenue Code, the IRC, and looking at those definitions, looking at what they are, how they define a product, so you know where the different product falls into the different tax schemes. And the key thing here is to recognize that there is no definition for seltzers or RTDs or any of these alternative products within the IRC. According to the IRC, all alcohol is divided into three types: beer, wine, and spirits. Beer is anything that is malt or malt substitute based. Wine is everything that is fruit, vegetable, or other agricultural product based. And spirits is everything with a distilled spirits base. So it depends on how you are deriving your alcohol content. And that will determine which of those three categories and therefore which tax scheme your product will fall into. So even if you are making a margarita in a can, you got the great lime and tequila flavorings in it, but I have derived that from a neutral grain sugar, which is a malt substitute. According to the IRC, according to all tax purposes, that is then a beer and will be taxed like a beer, will be reported like a beer, and all those things. If you are going to be making a beer adjacent product, a seltzer, an RTD from a non-malt or malt substitute base, then it is going to be either a wine or probably more likely a spirits. And therefore, it is going to be taxed in a different system. The other key thing there is there's also going to be very different licensing, different labeling rules, all sorts of stuff. So if you are going to be looking into making RTDs from non-beer, non-malt base, know that it's not simply a matter of just paying different taxes. There is a slew of different rules that go into that. Definitely something you want to have a lot of consultation and awareness before you get into it. But if you are a brewer, know that you can make basically all beer-related products. And so maybe if you want to get into the RTDs, that does make more sense to look for neutral grain spirits, neutral grain sugars, or other, malt-based sugar sources to derive your alcohol, so that you can make your margaritas in a can, you can make your hard seltzers, but out of a malt-based so that it falls under your current license and your current tax scheme. The other area to look at is for non-alcoholic beers. Again, another burgeoning area of this industry, a lot of interest in there. The key thing to know is, again, looking back to the IRC, taxable products must have an alcohol content above 0.5% ABV. Therefore, if it has a ABV below 0.5%, when you're selling it, when you're giving it to consumers, if it is below that threshold, it is not a beer under the IRC, and therefore is not subject to beer taxes. There are still a lot of rules around making non-alcoholic beer at the federal level, especially around how you label them, how you market them. So again, this is not something you can just do without any other consideration, although it is fairly simple if you want to get into it. But the key thing there is, for your tax purposes, it is not subject to taxes. You may still need to report it as production and then something that you have removed the alcoholic content from, but it is not subject to taxes, and so can avoid a lot of these complications and certainly the charges that go into these. So I'm going to move on now a little bit to talk about state level excise taxes. So everything has been focused so far largely on the federal level, but of course, this being alcohol, a lot of the actual nuances and day-to-day stuff you need to deal with is happening at the state level. And because states have, frankly, their own alcoholic schemes that really reflect a lot of the federal level, but are very locally based. And so states have their own excise taxes on both beer, wine, and spirits, on everything. They have their own licensing rules, own labeling rules, all sorts of things, and of course, including taxes. And so this is part of the overall control and local regulation of alcohol. Again, one of those key things that came up in the Towards Liquor Control book. There's this key idea that we need to have local control of alcohol because there are local considerations, local rules that need to be put in place, and that, we can't have a national scheme for this. We need to have local control to make sure that the local interests are maintained. A state may consider that their citizens are particularly susceptible to alcohol, and so might need higher taxes or whatever. So this is why they have the different rates and different rules around it. Of course, a lot of states also depend on beer excise taxes as a source of revenue. Especially at the state level, a lot of alcohol taxes are specifically designated for alcoholism treatment and enforcement. There are some places where it does just go into the general funds, but really the state level, a lot of alcohol taxes are much more focused on alcohol issues and dealing with our industry specifically. And then again, there is this sort of local consideration to determine, does the state want to encourage or discourage alcohol consumption? One of the things we have seen in the last 30, 40 years has been states that have been much more amenable to the craft industry, you might say, have been the ones that have done a lot more tax breaks, made things a lot more beneficial for craft brewers. And so, not surprisingly, a lot of states with lower beer taxes are the states that have, let's say, more developed craft beer industries. And so we should thank them for that. Again, one of these reasons to be active, aware, perhaps members even of your local guild, is to encourage them to provide local tax relief. You want to have the collective bargaining. You want to have that lobbying support that comes from guilds. And this is one of the key areas that they are really active, is ensuring that the tax rates on you are not so oppressive. Because here we're going to see, here's a breakdown of the different tax rates. This is coming from the Tax Foundation, a nonprofit organization that does a lot of tax research. So I did not make this map myself. I want to make it very clear. I took this from them and thank them very much for this. It says 2023. However, really the rates have not changed since then. They have been pretty static for, honestly, decades. But we can see this really wide variety of beer excise taxes across the country. Note that all these rates are in dollars per gallon. So if you want to compare them to the earlier rates we saw at the federal level, you need to multiply these by 31 in order to get the dollars per barrel rates. But you can see how there is this wide variety of what's out there, ranging from states like Tennessee, Kentucky, Alaska that are around $1 per gallon, to states like Wyoming, which is 2 cents per gallon. It's practically giving it away. But then plenty of other states, Colorado, Oregon, Wisconsin, very low rates that you want to be aware of. And the key thing you want to be aware of then is that the taxes that you are paid, where these taxes apply, is in the state where the beer will be consumed. And so if you are a California brewery and you are making beer that will be consumed within California, then it's a 20-cent California excise tax will apply on that. If you are then going to start distributing, you have some consumers in Arizona and Oregon, you will then need to be paying those other taxes or have those other taxes applied in those other states. And because these taxes are indirect taxes, they are not collected directly from the consumers, you want to make sure that these taxes are incorporated and acknowledged within the prices you are setting in the different states. So let's say a different scenario. Let's say you are a brewer in Southern Illinois. You have a good regional focus and you want to start selling in the neighboring states into Kentucky and Tennessee and Missouri. Well, just note how different the tax rates are in Missouri and Kentucky and Tennessee. It's there's over $1 difference between the taxes, dollar per gallon difference between the taxes in Tennessee and Missouri. So you may need to set your prices differently in Missouri and Tennessee in order to make sure that you are going to collect enough money in Tennessee to make up for the taxes that will be owed on that. Versus in Missouri, you can maybe get away with a lower price. And again, one of the things we may want to be working for as an entire industry is leveling this and creating a little bit more parity among the different states. So, when you are looking into perhaps lobbying efforts or talking to your local guilds, again, you may be able to point to them and say, I'm a Kentucky brewery. It seems crazy that our taxes are so high compared to our neighbors. Is this really creating parity? Is this really fair for us? Maybe we should have a review of these different rates and create something that maybe is not quite at the 6 cents per gallon level as it is in Missouri, but is fairer and more amenable for us. So again, just to be aware of what these different rates are when you are starting to ship across state borders, and be aware of how you relate to them as an entire industry. Is your state fair compared to other states? When we're looking at how state excise taxes are paid, again, probably a lot of parallels to the federal rate. Again, the key thing to keep in mind is that taxes due in the state where beer will be consumed. And so again, if you are making beer that will be consumed within the same state where it's produced, that is the home state rates. You can just keep to your home state rates. If you are making that type of beer, you are the brewer. Excuse me. That means that you will be the one who's paying taxes. As a beer manufacturer, you generally owe taxes on what you make and that you sell within the state where it is made. Again, that state level tax will be owed when it is taken out of bond. So just when you are paying your federal taxes, you'll be paying your state taxes as well. You may be on a different filing schedule at the state level from the federal level. So you may be needing to delay the actual remittances depending on what your different filing schedules are. But again, it is that taking out of bond event that is what signals when the taxes will be paid. And again, so you want to be aware of when you are taking the beer out of bond, whether that is when you're either bringing it to your local distributor for sale within the state, whether you're bringing it to your tasting room for sale or sampling there, whether you're taking samples out to be brought around the state, whether you're doing distribution yourself to local brewery, local restaurants or whatever. Again, it is that single moment of taking out a bond. That is when the tax is due. And again, if it is going to be consumed within the same state where it is made, that means you as the producer, you as a manufacturer are the party that owes the taxes on it. This is different when you are selling interstate. Again, the rule generally is that the first party to own is the party to owe tax in the jurisdiction where it is due. And so this means that if you are a California brewery selling into Arizona now, it is your Arizona distributor, is the Arizona importer that is the party who owes excise tax. You should not be paying Arizona excise tax. It is your distributor in the state that is paying the excise tax. Again, you want to be very clear about that, very aware of that, because one, you want to know, going back just very quickly to the different rates, what is the rate in that different state so that you can incorporate it into the prices you are setting to the distributor so that they will be, the taxes will be collected and be made sure, when you're setting prices, again, that the taxes will be recognized and be available to be remitted to the state, not having to come out of your own pockets, not having to come eat into your profits in the state. You want to be aware of that. You also want to be aware of making sure that within your contract, within your distributor agreement, it is very clear that the distributor acknowledges their responsibility of owing the taxes and that they will be paying the taxes, and any failure on their part to pay the taxes is a material grounds for cancellation and termination. You want to, again, when you're creating distributor agreements, this is very much an area where you want to be working with counsel, want to have an attorney on hand. Make sure that they are using clear and distinct language, that failure to pay taxes is one of these reasons why you can at least renegotiate, if not actually cancel your distributor agreement, because if they are failing to pay taxes, you could get in trouble for that as well. Your name is on the label. The state is going to want to know what's going on there. And so you really want to get ahead of that and be aware that it is the distributor responsibility and that they are holding up to that. There are some exceptions to this rule. There are, as ever, there are a few states that do not impose that responsibility on the distributor. The key ones are Missouri, Pennsylvania, and Wisconsin. If you are a distributor or a brewer, in a different state, say again, California brewery, selling into one of these three states, know that it's going to be your responsibility to collect and pay the taxes. And so you want to be aware of that and not imposing that on the distributor, not assuming somebody else is going to be doing it, getting ahead of that yourself and looking for whatever support and help you can get if it is going to be a complicated process. The other key consideration when you are distributing interstate is to, again, recognize that tax is due on the state where it is consumed. So if you're selling interstate, that means tax is not owed in your home state. You probably will still need to report it as production, but then you will want to make sure that it is included in your deductions on your home state excise tax report, that it is indicated as a sale for export. It is not consumed in your home state, and therefore it is deducted from your home state excise tax return, and you are not paying California excise taxes when you're selling it to Arizona consumers. Key consideration, we've definitely seen some breweries out there who are paying double taxes. You don't want to do that. So again, just want to be aware of these different rules, different processes when you are selling interstate. Of course, it is not only about taxes and tax payments. There is a lot of other reporting rules when it comes to selling beer interstate. A lot of these rules are around tax payments. Basically, states use these reports to make sure that they are getting the revenue they expect. And so these reports often take the form of, regular, perhaps monthly, semi-annual, quarterly shipping reports that might be a single line item, sort of, we made these sort of sales on this date to this person. This is the total volume. States will use that to then check on their distributor returns, make sure that the distributors you are reporting receive the alcohol, the beer, are then paying the taxes owed on this. And so this is one of the ways this is one of the things you can't just assume that the states will do it all and maybe not find out what's going around your distributors. They will check on this. They will make sure they're getting the taxes owed. If they are not getting it from the distributors, they will then look to your reports and have some very concerning questions and lobbying nasty letters and threatening fines and all this sort of stuff. So again, just want to be aware of it. But then filing your reports is a key part of ensuring that you are in compliance. You are doing everything you can, and you can show, we're trying. Maybe it was a distributor's fault. Maybe something happened. But know that your obligations, that these obligations when you're coming to interstate sales, and it does not fall just on taxes. There could be a lot of related reporting requirements around these. Some states even require you to send in copies of your invoices. So when you are selling, on the day that you have made a sale to a distributor and you're filing them an invoice, you would need to file that with the state at the same time. Again, all part of this whole grand scheme of tracking and reporting, accounting and auditing that goes into the whole scheme around not only alcohol taxes, but being an alcohol regulator and alcohol enforcement in general. This is a very data-heavy, data-driven industry. I got one last little quick thing to talk about, which maybe not be much of a surprise if you have ever seen me do a presentation before or anywhere else before on direct-to-consumer shipping. Direct-to-consumer shipping is a key thing that we support at Sovos ShipCompliant, along with all of our brand registrations and other reporting things. Shipping is in our name. This is how we got our start. And we do support even for the beer direct-to-consumer shipping market. So if you have any questions about that, want to know how you can be compliant and live up to your obligations if you are doing this, feel free to reach out to us. When it comes to direct-to-consumer shipping, know that taxes and excise taxes particularly are a central part. This is, again, one of the fundamental parts of the industry is taxes. One of the key things to know within direct consumer shipping of beer is, frankly, how limited it is right now. There are only about 10 states that have clear, specific rules for interstate direct consumer shipping of beer. There is a list here. If you go to our website, sovos.com/shipcompliant, we have a lot of free public available rules that you can look on, more direct shipping rules, see where it is available and how you can do it. But again, if you are shipping into any of these locations, except for the District of Columbia, that's the one exception, know that excise taxes will be due on what you are shipping into there. And since you are the responsible party, you are the licensee, you are not working with a distributor, that means the excise taxes will be paid by you. Again, these are one of these destination state things, so make sure to deduct it from your home state taxes, but you will be owed the excise taxes. There are also sales taxes are generally due on sales to these locations as well. However, sales taxes is a huge other presentation. Again, we have information on the website. If you want to know more about that, happy to talk about it some other time. The main thing I want to get away in part on this slide, though, is really recognizing how central taxes and compliance in general is for direct consumer shipping. As I say, direct shipping is very limited at this point. We are trying to expand it, make it more available, convince more states to make this a legal part of their markets. And one of the key ways we do that is by demonstrating compliance, by demonstrating that we can pay taxes, that we can follow the rules. And so make sure that you are doing this, and we can hope to spread it to more states. There's been a lot of interest in the spirits side of direct shipping, and we need to generate more interest in beer and make this more accessible as well. And again, if you are then getting into direct shipping, this is something to be aware of. If you walk to a service that says, oh, you don't need to worry about taxes, oh, you can ship anywhere, that's really a key thing to be aware of and recognize that maybe they're not saying things quite right. They are maybe confused or are a little bit less than legitimate when it comes to direct shipping. And so you should have some very, very key and pointed questions about what they're doing, what they're telling you, and why maybe you should not go with them. And again, follow the compliant market, because that is how we expand it and make this a more accessible and more available market for everybody. But having gotten off my hobby horse, talked about, again, the important things around direct shipping, We'll leave it there, and we have a little bit more time for questions if you have any. I know I talked a lot about a lot of different things. Again, I think excise taxes is one of these very fundamental, very key things of our industry, not only for breweries, but for everybody. And so I hope that a lot of what I talked about is not necessarily news, but is still, I think, hopefully something good to recognize, be reminded of, be aware of all the nuances that are out there, be aware of what it might get more complicated as you hopefully grow, as you expand your markets. But, until then, I just want to wish you a lot of luck in your business, in your growing, in succeeding in these admittedly trying times. But there is a lot of opportunity out there, and I know that we can get back to growth and success. And we'll be doing that compliantly and by paying our taxes. So thank you for indulging me. Thank you for listening to me today. Thank you again to Andrew and everybody at Craft Brewer Professionals for inviting me. And I hope to be back soon to talk to you about more interesting regulatory topics. Thanks again.
Thanks for watching. If you enjoyed this session, we'd love to see you in real life. We host in-person workshops across the country for craft beer professionals just like you that are held in some of the most exciting beer destinations around. These immersive events are designed to help you grow and connect with others. You'll meet peers from across the country and leave with actionable strategies for success. Connection has never been more important, and you can learn more at cbpconnects.com. Cheers. See you there.